So here we go. Basically, you have three categories of tax credits. You have non-refundable personal credits, you have business-related tax credits, and then you have refundable personal tax credits. So we've talked about non-refundable versus refundable before. Remember, non-refundable only bring tax liability down to zero, okay? Business tax credits mostly only bring tax liability down to zero, but unused portions can be carried forward. So non-refundable, personal, let's do this. Lost if not used. Okay, so non-refundable personals are lost if not used. Business credits, the unused portions, can be carried forward. Okay, and then that brings us to refundable personal credits. Remember, those can bring tax liability below zero. So if we look up at these three categories, this is the order in which you would want to apply them. So if you had non-refundable personal credits, you would want to take those first. Next, you would want to apply your business-related tax credits to your tax liability. And then finally, you're going to want to use your refundable personal credits to offset your tax liability, because these allow your tax liability to go down to zero. So the next credit we're going to talk about, really the next two credits we're going to talk about, are both education-related credits, okay? So the first of them is the American Opportunity Credit, all right? It used to be called the Hope Scholarship Credit. Now, there are some big differences between these two credits. So these are very important things. This one is for the first 4 years of post-secondary education only. All right. So, if you have a 5-year program or whatever, this one is only eligible for the first 4 years. So essentially, you could take this credit for 4 years. Okay. It's for eligible expenses and institutions. So what are eligible expenses? Tuition, fees, and books. Okay. You must pay the expenses in 2019, or, interestingly, the first 3 months of 2020. Okay, so that's kind of cool. Here is a large difference between this and the next education credit we're going to talk about. This one is applied per student. So what that means, and it's eligible for the taxpayer's spouse, and the taxpayer's dependents, okay? And amounts paid by your dependents are treated as paid by the taxpayer. So, for example, I have 3 children. It is entirely possible that they are all going to be in college at the same time. So, if they all qualify for this credit, meaning they're in their first 4 years of post-secondary education, all right, and they have eligible expenses, tuition, books, and fees, then I could get 3 American Opportunity credits because I have 3 children, okay? Now, this credit maxes out at $2,500. There is a phase out based on AGI, and that's again in those Chapter 8 schedules, okay? And there's a phase out for single and head of household, and then a separate phase out for married filing jointly. And again, we'll do examples of this, okay? And 40% of this credit is refundable, all right? So kind of take all of those things. Remember, the maximum amount of credit for this one is $2,500, all right? And it is phased out based on AGI. Now, the second education credit that Chapter 8 talks about is the lifetime learning credit, all right? Eligible expenses include tuition and fees, not books, all right? So that's a huge difference. Another big difference that we want to highlight is this includes professional education or graduate school, so it is not limited to the first 4 years, not limited to first 4 years, and it includes continuing education. So things like CPE would count for the lifetime learning credit, okay? Again, another huge difference. This is applied per taxpayer, and if you're married filing jointly, your return is considered one taxpayer. So in this situation, my same 3 kids, if they are all in college at the same time and they all qualify for the lifetime learning credit, they cannot all take the lifetime learning credit. I only get 1 lifetime learning credit for my married filing jointly tax return. Now, 2 of them could be eligible for the American Opportunity credit, and then 1 of them could be eligible for the lifetime learning credit, okay? But you only get 1 lifetime learning credit per married filing jointly return. So that is a huge limitation of this credit. 20% of up to $10,000 of eligible expenses. So the max for this credit is $2,000. It is also phased out based on AGI. It has different phase out amounts than the American Opportunities credit. The phase out amounts for the lifetime learning credit are also in that Chapter 8 schedule sheet. You will have access to those for homework, obviously, and for exams, okay? So don't worry about those things. All right, so I do have one example in here, and it's an American Opportunity credit example. So let's do that. And I'm hoping that this video doesn't end up too long as a result, but we'll give it a whirl. All right. So we've got Courtney, and she paid $2,000 of tuition and $300 for books for her daughter Ellen to attend the University of Missouri, Kansas City. And this is her first year. Okay. What is the maximum American Opportunity credit, before the phase out that Courtney may claim for these expenses? So remember, American Opportunity credit, first 4 years of school, tuition, fees, and books count. All right. So how do we calculate this credit? Well, we get 100% of the first $2,000 spent, all right? And then we get 25% of the next $2,000 spent, all right? So what does that say for Courtney here? All right, so in Courtney's case, so we get $2,000 times 100%. That's her first $2,000. Her next $2,000 increment, she only has $300, all right? And she gets 25% of that, all right? So she gets $2,000 of that potentially. We haven't applied the phase out yet. And then what is our 25% of 300? That is $75. So her maximum credit, max AOC credit before phase out equals $2,075. Okay, so let's move forward. So max credit before phase out is $2,075. Now, I don't remember if I've got the other information. Ooh, I do. Okay, so we've got this as her max credit. I forgot that I had split this up on two different slides. And we know she's married filing jointly, and we know her AGI is $162,000. Okay, so what do we have to do now? So now we know, if we look at the Chapter 8 schedules, the phase out range for married filing jointly is $160,000 to $180,000 AGI. Okay, so we have to find her phase out percent. So her phase out percent equals 162 minus 160 over $20,000. Now, where does that $20,000 come from? That $20,000 is the range of the phase out. Okay, so that is how we find her phase out percent. So her phase out percent then is, is 10%. Okay, so what does that mean? That means that we apply that 10%. So 2075 times 10% equals phased out amount. All right, so our phased out amount is $207.50 equals phased out amount. So her AOC credit equals 2075 minus 207.5, which equals $1,867.50. So that is her credit amount.